Welcome to this week's Monday morning briefing. This is a slide deck we've been putting together for a few weeks now. We intend to refine it based on your feedback. This week we added an additional slide that I think gives a pretty interesting view into market valuation, compares the level of the S&P 500 to the M2 money supply. And what the slide shows essentially is that we are at the peak or even slightly above the peak of the dot-com bubble. So that's an interesting data point there, and it really speaks to what I've been talking about in terms of dollar debasement driving a lot of the increase in the market, which is obviously quoted in nominal terms, and also a reason I've been hesitating to go short this market just because of the dollar has been so weak, or should be even much weaker in my view, given what the government has been doing on both the monetary and fiscal side. In any case, but even when we look at the market level compared to the M2 money supply, which has been growing ahead of the official inflation rate, the market looks quite overvalued. Now, we don't know what the M3 money supply is, which I'd like to look at, but the Fed actually stopped publishing that figure, I think in 2006. So we don't really know where money is, but it certainly seems that there's plenty of liquidity sloshing around, at least at the moment. Nonetheless, I think the market is at a very elevated level. What you do with that is, a bigger question. I personally prefer to invest in undervalued companies, cyclicals and others that at the moment offer good value and have inflation protection as well, real estate being one of those. Real quick, this week we also have a few things that we enjoyed reading that I would just highlight for you in case you haven't looked at them yet. Will Thomson's Q1 letter to massive capital investors is really a very insightful read into investing in real assets, as well as the geopolitical situation we're in that's affecting all assets really through the transmission mechanism. And where there's a really interesting insight here is on the geology versus geography idea. And according to Will, we basically in the last 25 years took kind of a vacation from history where a lot of the commodities that we look at have had a global price just because trading and transportation have been so open. That's changing, so geography is starting to be as or more important than just the geology, and that may continue. In fact, it seems likely to continue if one looks at historical precedent. In terms of the energy picture, the futures pricing around $100 a barrel doesn't tell the whole story. According to Will, the actual cost, once one takes into account insurance and shipping and other items, has been closer to $120 a barrel or even above that. And the reason we haven't seen a lot of the impact on the broader economy is because of quiet destocking of strategic supplies and also basically some demand destruction in the second tier, things like KLM flights or certain Asian chemicals production, etc. So those are very good insights by Will. Another item that's worth watching is the supply crunch we are starting to see in some areas, such as tungsten, which is a strategic metal. That's been basically, the US has been an importer of tungsten, and China has restricted supply. So Will was able to identify and be the first institutional investor in a company in Portugal that is supplying it, and that's been a home run for massive capital recently. and remains a very interesting story. Some of the other articles worth highlighting, certainly Christopher Tsai's recent think piece on what a value investing 4.0 might mean. He articulated it very well in his white paper, which I encourage you to read, and I look forward to having a fireside chat with Christopher Tsai on this in just a few weeks at the Zurich Project event that I'll be hosting. Very interesting how he thinks about value investing 2.0, 3.0, where he still allocates the bulk of his capital, and then the emerging 4.0. So I look forward to delving into that deeper with him. I wouldn't venture to articulate it properly here, but I do encourage you to read his article on that. Also, Michael Mauboussin dropped a new white paper, an update of sorts on his base rates white paper, and what's very interesting there is he addresses the big elephant in the room, which is AI, and essentially makes the case that if you're using base rates, the projections that companies like OpenAI and others are putting out there are really a huge anomaly if those were to turn out correct. And so he expresses through that analysis a lot of skepticism about projections that are baked into market prices of some of the leading AI companies. Harvey Sawikin also had an article basically laying out why we are in a bubble and what might happen next. So I encourage you to read all of those pieces to get your week started off. Have a great week, and we'll talk soon.